Hello guys, I hope you guys are well. In this video, I'll be showing you guys the indicators that I use to scalp every single day, and that has allowed me to make over $200,000 in prop firm payouts. Now, my strategy is very simple. I just scalp on a 1 minute time frame, or the 3 minute, the 5 minute. Sometimes I even trade the 15 minutes. However, the main thing that I use are these three indicators that I'm about to show you. Now, I'm currently on TradingView here, so let's get straight into it. So in order to get these indicators, first of all you need to go on TradingView, and then you click on the indicators tab at the top here, and then you search your indicators. So obviously the three indicators that I use is the EMA, which is the moving average exponential, or the exponential moving average, which is what it stands for. And I also use the simple moving average, which is already in the EMA. So all you need to do is add the EMA. So you add this, and then you'll get this on the left. And then I also use the VWAP. So those are my three indicators. The VWAP is the volume weighted average price. And yeah, those are the three indicators that I use. So but obviously once you have these indicators added in, you want to be changing the settings. So for the EMA, I like to have it at 50. This is just my preference. And this is just what I've stuck to for a very long time now. And just in case you're wondering, what is 50 length on the EMA? So basically the EMA is the exponential moving average. It basically collects 50 it collects the last 50 candles on the chart, and it forms an average line on your chart. And the average line on your chart, you can potentially use it to for future references, for future supports, resistance. Very simple. You just use it to look for areas to buy, look for areas to sell, maybe even look for areas to take profit, or stop yourself out. And I'll get into a lot more of that in this video. But yeah, so I like to have the setting at 50, and I like to have the smooth simple moving average on 200. Now, once again, the simple moving average collects the last 200 candles, and it forms a smooth line on your chart. And the same thing as well, you can use it for future references, an area of support, resistance, take profit, SL, etc. So yeah, and the differences between the EMA and the SMA is that the EMA is a lot more reactive, is a lot more volatile, and it reacts to quicker changes in trend. It reacts much quicker than the simple moving average. However, the simple moving average is also very good because it is less prone to fake outs. So because it's more smooth. So as you can see here, the blue line on my chart is the EMA, and the purple line on my chart is the simple moving average. Now, as you can see, the EMA is, price is constantly above the EMA, below the EMA, above the EMA, below the EMA, as you can see. However, if you look at the purple line over here, we're rarely, faking out and breaking out. And when we do break out, we do go lower, as you can see. And then when we come back up into this 200 simple moving average, we do, treat it as resistance, and we do end up bouncing off this level. So as you can see, yeah, so this is why I use these indicators, and that is the difference between the EMA and the SMA. Now, once you have these settings, you want to go to style, and then you want to make sure you turn the EMA on, and the EMA based MA, which is the 200 simple moving average. Great. Now, next up is the VWAP. Obviously, you don't need to change anything. I like to have this color on orange, but yeah, so you don't really need to change anything. I think, yeah, so I removed some of these bands here actually, because they normally come with upper bands like this. However, I like to remove all of the upper band, the lower band, and just keep the VWAP only. The setting is, yeah, so the setting is just, as it is. I didn't really change anything with the settings. So yeah, let's leave that as that. And now I'm going to go over some examples on how you can use the VWAP, the EMA, and the 200 simple moving average to help with your trading. Now, currently here we are on the Nasdaq, and we're on a 1 minute time frame. This is the time frame that I like to trade on. So cool. As you can see, the market opens here at 9:30. I'm only going to be using New York session as, you know, an example, because that is the only session that I trade. I don't trade any session before you know, the New York session, just because the New York session provides the most, you know, liquidity and, you know, volatility in the markets, and where, you know, price will actually go. There's actually momentum. Cool. So yeah, New York session, 1 minute time frame, Nasdaq. And so okay, cool. So as you can see, 9:30 here, the market opens, and if I just zoom in a little bit, you know, before the market opens, we're currently above the 200 simple moving average, the 50 EMA, and the VWAP. So along with these three indicators, you know, I'm actually going to write this down as well. When price is above all three indicators, I like to look for longs, right? You know, it's just simple. When price is above all these three indicators, you want to look for long, right? And, you know, if, you know, when price is below all three indicators, you want to look for shorts. Okay, simple. So as of now, you can see the price is above the, you know, 200 simple average, the EMA, and the VWAP. Now that doesn't mean that you can just instantly buy whenever it's above, because if, you know, if you buy here, you would have got faked out. You know, you would have lost 15 points. Same with here as well. If you bought up here, you know, you would have been down in some drawdown, and then when New York session opens, you would have got wrecked. So yeah, so the reason we use these indicators is because we want to look for, you know, the best the best opportunities, the best price to get in on our positions, and this is exactly the indicator that I use to help me with that. So as you can see here, the market opened above, you know, the indicators. However, we do end up coming all the way back down, and as you can see, if you notice, we did come into this orange line here, which is also known as the VWAP. Now, this is a very a good prime example of a trade that I will take. I did not trade on Friday, but this is a very, you know, this is a very good example of a trade I will take. So I will take this off straight at the VWAP, like so, and I would have had my stop loss maybe at, you know, just below 200 even. So I'll put it 23,190, and as you can see, you know, I would maybe target these pre-market highs here, or these pre-market highs up here, as you can see, for a nice 62 points on the Nasdaq, as you can see. And this trade would have played out extremely well if you held this all the way through Fed Chair Powell when he spoke about I believe rate cuts. But yeah, as you can see, 400 points on this simple trade that here you could have taken. However, you know, you're not always going to be holding through these news, so, you know, but, you know, you would have already got 122 points on this trade even before Fed Chair Powell came on and spoke at 10 a.m. But yeah, as you can see, this is a very good example of using the VWAP to scalp and, you know, get into position and buys and stuff. So also, if I go over here, as you can see, the 50 EMA. Now, what I like to look for on a trend day is, you know what, I'm gonna sketch this one out. All right, so I'm gonna sketch this one out. Let's say this is our 50 EMA line here. Actually, no, let me draw that again. Let's say this is our 50 EMA line here, and let's say this is the price, right? Let's say this is price, this is price. You know, we come into the 50 EMA, we hold above, we come back in, we hold above, and then here we finally break. Now, once this has finally broken, the 50 EMA will start to curl down following price, you know, as it collects more data. Now, why did I draw the sketch? I drew this because this is exactly what I like to look for when I'm this is what I like to look for on a trend day. Now, on these trend days, you know, we're gonna have price just trend and just go higher and higher, or maybe even lower and lower, you know, vice versa. But, you know, we're going to be using a trend long day as an example here. So a lot of times on these days here, you know, the 50 EMA is just going to be following the price. And I don't really like to buy at these, you know, tops. You know, I kind of want to buy at these pullbacks. But obviously, you know, sometimes when you buy at these pullbacks, it can just go lower, right? So what I like to do is I like to wait for price to come into a key level, And the only key level right here is the 50 EMA. Now the 50 EMA sits here, and as you can see, price comes in, taps into the 50 EMA. I would have gone to a long with my stop loss below the 50 EMA for, you know, a break. So if price were to break below the 50 EMA, I would have gotten out. But in this case, you know, let's say, you know, it does hold, and I would have stayed in this long for a very nice long. So yeah, I'm actually gonna find some examples for you in this video, but so yeah, as you can see here, we did eventually come into the 50 EMA yesterday. However, we did eventually come back down and break lower. And if you notice over here, this purple line, this is the 200 simple moving average. And once again, like I said earlier, the difference between the EMA and the SMA is that the EMA reacts a lot quicker to, you know, price fluctuations. However, the 200 simple moving average is a lot less prone to breakouts and fake outs. And as you can see, we have a very high possibility that when price comes in, you know, it will bounce back up, you know, using the 200 simple moving average. But we can't really say the same for the 50 EMA because it reacts, you know, to a lot of price fluctuations. So in this case, you know, as you can see, at 12.56, we came into the 200 simple moving average and we bounced higher. So if you took a long here, actually, with your stop loss, you know, I don't know, about 30 points below this, you know, just in case we break down below, you know, that would have been a short. But yeah, if you took this here at the simple moving average, you would have caught 110 points on the Nasdaq, which is extremely, you know, this is no drawdown as well. And as you can see, obviously, once you get into this position, you would have used the 50 EMA as an area of, you know, support. And if the support breaks, you would have gotten out. So like for example, you know, you would have held this trade and then you would have waited for price to break below. And as you can see over here, this is when price starts to break below the 50 EMA. This is exactly when I would have gotten out. You know, I'm not going to sit here and say I would have got out at, you know, 625 or 110 points right at the top. You know, I'm going to be realistic here. I probably would have gone out when I saw that it starts to break below the 50 EMA. So I would have probably caught around 85 points or maybe 80 points. But even then, as you can see, this is a very good trade. No drawdown on this trade. It taps into this 200 simple moving average and instantly bounces up, you know, going higher. And we break above the 50 EMA as well. And then we just hold it until we did eventually come in and we break below the 50 EMA. As you can see, this is a very simple strategy that I use every single day on my trading channel. This is also the strategy that I teach as well. If you're interested in joining the premium Discord, I'll leave a link in the description. I'm currently running a flash sale of 50% off. You can use flash 50 at checkout for 50% off on your purchase. Now in the premium Discord, you're going to be getting hours of content on strategies, risk management, and many more. I also run webinars every Saturday at 1 p.m. UK time. So if you're interested, you can join the Discord, the free Discord, and you can watch the webinar, you know, when I host it at 1 p.m. every Saturday. So yeah, if you're interested, I'll leave a link in the description. You can join the free Discord, join the webinars every Saturday, or you can use code FLASH50 for 50% off. And yeah, I hope you guys enjoyed this video. I hope you guys learned something. And once again, this is the strategy that I used for, you know, a couple years now that has allowed me to make over $200,000 in prop fund payouts. I hope you enjoyed this video. Thank you for watching.